Hi everyone, today let's talk about why the US economy has remained so resilient. Then we'll look at all of our normal indicators, the calendars, the charts, as well as my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the US economy has remained very resilient, surprisingly so. There was a lot of people predicting that there was going to be a recession, and we really haven't seen it yet. And this graph gives you an idea of how tight financial conditions were, and then the real GDP in terms of cyclical and non-cyclical components. You can see here from December of 21 all the way here to September, October of 22, we saw financial conditions tightening, and we saw year-over-year numbers in terms of GDP going negative. And then as we have moved into September of 23, which was last quarter, you can see cyclical components turned a positive GDP over 2% and above non-cyclical components because we're starting to see financial conditions ease after SVB. And now we've had the Fed pivot where they said they are likely not going to hike again, and most likely we're going to see cuts early this year. And when I say early, I really mean about the first half of this year. I expect to see one cut at least, and up to 3 cuts for the year is what the Fed is projecting right now. The market wants to see a lot more than that. Obviously, that remains to be seen. We'll take a look at the Fed futures later, but right now, looking at 3 cuts, and then moving down to the article, you can see cyclical parts are starting to outpace non-cyclical ones, which means that trend is towards growth right now, and that's part of why we're seeing strength in the economy. They also mentioned there is pent-up buying demand due to the lockdown era, and there is still a boost in terms of money conditions sitting out in the economy from those times. So we haven't depleted all of that money. There is still more money in the system than there was before, and you do have to factor those things into the overall markets. Moving over to the Fear and Greed Index, you can see we are just about flat from a week ago, but about 2 weeks ago, we were quite a bit higher than this. You can see right here at the end of December, we were in the 80s for a moment. We also touched 80 here on 15 December, and now we've had a pretty significant dip, dipped all the way down to 61 on 8 January. Now we're back into the 70s, but pretty significant dip. And you can see last time we did see a dip like that, we did have a short-lived bounce, and then we saw significant downtrends back into that extreme fear area, back into that 25 range. So definitely interesting. If we see another iteration of that, that would indicate there's a lot more downside to come. In terms of momentum, stock price strength, as well as breadth, all of these are still in extreme greed, but you'll notice strength rolling over, breadth rolling over. We've been talking about that one quite a lot. Put call ratio still in greed here. Volatility has remained neutral for a while. Tested that 50-day moving average and then broke down from there. And then looking at safe haven demand, still neutral, and definitely extreme greed here on junk bond demand, quite interesting. And that's really been rising. So that was neutral at first, almost in fear a couple of times, and then we've jumped all the way to extreme greed. So interesting to see that as government bond yields have moved lower, junk bond demand has remained quite strong. Moving over to the AAII Sentiment survey, we're still in the same range that we were last week, 48.6, got the exact same read this week. Very little movement on neutral. Bears did tick up slightly, and we are really just below our 1-year highs at 52.9, so still lots of bulls, as you would expect, coming off of that Fear and Greed Index. Both of these to me mean there's still a lot of bullishness in markets, which actually makes me a little bit more bearish. Moving over to seasonality, we just finished trading day 9, so we're looking at about another day or two of upside to trading day 11. Then we have a pullback from 11 to 13, so bump Monday, Tuesday, fall into the end of the week, which is the 3rd week options expiration. We'll see if that follows through, but typically see a little bit of weakness over the week. You can see all of these dips were more than the rallies that they saw, so expecting lower lows and then sideways price action into the end of the month based on seasonality. And then similarly here, looking at the individual days, 19 of the last 31 Tuesdays were bullish on the 16th, which is the first trading day of options expiration. And then January expiration week, bullish Wednesday, so we have that 2 days of bullishness. And then pretty significant down day expected on the 18th. And then expiration, 11 of the last 13 were positive for the Dow. And then going into next week, you have 23, 24, 25, which is the best 3-day span and something to watch going forward for the rest of the year, as it is the January barometer. So we'll take a look at that when the results are emailed on January 31st. So don't forget to like and subscribe and hit the bell so you don't miss out on that. Moving over to the earnings calendar, we got Morgan Stanley and Goldman Sachs on Monday, pre-market. Banks have started out a little bit rough, and we talked about that on Friday. It's been a little bit rough, and it looks like they're going lower. So keep that in mind. But going into the rest of the week, we got Charles Schwab here on Wednesday. Thursday, not much, just a couple of smaller banks. And then Friday, we do have SLB, which is a oil and gas company, fairly interesting, but pretty light on the earnings after the banks. But after next week, it does pick up quite a lot. So going out to January 22nd, 23rd, you have Microsoft. That's obviously going to be massive. They just became the largest company in the world. Verizon, Netflix, J&J, General Electric, 3M, Invesco also that day. And then on Wednesday, the 24th, you have Tesla, IBM, AT&T, fairly interesting. And then Thursday, you got Visa, Intel, T-Mobile, Comcast, Union Pacific, Starbucks, American Airlines, fairly interesting. And then Friday, Caterpillar, American Express, Colgate-Palmolive, and Church & Dwight. So this week, pretty light on the earnings, but next week, absolutely massive with some of the heavy hitters coming in. Moving over to the economic calendar. We talked about it before, but Martin Luther King Day markets are closed for Monday. Looking at Tuesday, Fed Waller, not much. CPI for the Eurozone on Wednesday. Core retail sales and headline retail sales for the U.S. on Wednesday at 8:30. That's definitely going to be interesting. Very important one, too, for last quarter. Does include a lot of holiday sales, so we'll see how that comes in. And then looking at Thursday, got Philly Fed manufacturing, fairly interesting. Initial jobless claims, also interesting. Fed balance sheet, continue to watch that. 10-year note auction for tips, very, very low on the last read at 2.18. So inflation expectations, very soft. And then looking at Friday, existing home sales at 10 o'clock. Michigan numbers, consumer sentiment, and inflation, fairly interesting. And that'll wrap up the week. Moving over to Max Pain. Max Pain all the way down at 460, so that is not great. Usually that's kind of a center point for markets to head towards, especially with the weakness that we have been seeing. Current stock price 475 with Max Pain down at 460 for the Friday expiration. That is a lot of downside at around 4% from current levels. And then total options 4.45 million. Put call ratio at 2. And you can see the put walls don't really get very big here until 460. That is your Max Pain. 465 and 470 are fairly interesting, but realistically, I would expect this to move lower. There is a lot more puts in the market still, so 480 only at 75,000 calls, and then you have 475 at 48,000 puts, so that's also interesting. But again, I would expect this to move a little bit lower, probably between 465 and 470. Seems like a better midpoint than where we're at now, which does indicate a little bit more downside, and we've been talking about that for a bit. Markets have looked weak, and breadth is also looking weak. Moving over to the charts, we did end up with a positive week, so 1.84% on the SPY for the weekly chart, and you can see we're right at these same highs. The same highs from the 18 December week, same highs from 26 December week. Saw that pullback, testing that level again, and then we're kind of expecting a bit of a breakdown. Momentum has faded here. It was flat from last week to this week, which is definitely interesting. Not at a major level. Resistance for me still at 48.70 or so, up to about 48.80. But I think the bigger point here is that we are basically at all-time highs, flirting with those same levels we saw in January of 22, touching that same level. And if we don't break out here, that's going to be a pretty significant indicator of downside to come. It's been a colossal rally to here. It does seem to be fading in terms of momentum. Let's look at it on the daily chart just for a moment. On the SPX, you can see that momentum, significant pullback, hovering right at those same highs. Saw a little bit of weakness on the Thursday session, recouped most of it on Friday. Flat for those 2 days, and then looking for that bigger breakdown, especially based on what we're seeing on seasonality as well as Max Pain. Moving over to the SPY on the daily chart, you can see I was watching for a head and shoulders pattern. This right shoulder has kind of topped out here with the head. We're at that shorter term resistance here, and I'll move that up so you can see the pattern a little bit better. So we're here moving into that right shoulder or double top, depending on what we get. We're right at that level. Short-term resistance 477.40. All-time high is that 47. Short-term resistance 477.40, and then we have that all-time high at 479.30. Haven't touched it yet. Momentum basically neutral but slightly bearish. RSI just barely above the SMA, but realistically I'm watching for this to break down at this point. If it breaks above the short-term resistance and holds and then pushes to that next level, then the trend continues, so you do have to keep an open mind there. But right now does look like a double top with fading strength. Let's look at that on the hourly just for a moment. You can see what I'm talking about. On Thursday, tested that level, broke down quite a lot. Tested again here on Friday, broke down, selling off after hours. And you can see that after hours sell-off actually accelerated from what we talked about in the Friday video. So that doesn't look great either. If it breaks below the 55, currently trading at 475.56, that could be interesting. Next level to the downside, 474.78. And then below that, I have 470.80. Moving over to the NASDAQ, positive week, 3.23% to the upside. Momentum did tick back towards bullish, which is interesting. We're still right at all-time highs. I think that's a new all-time high in terms of a closing basis. We're above these highs from November of 21, which is interesting. RSI pulled back all the way to the SMA last week, bounced a little bit this week. You can see that a little bit better here. Bounced off that 9 EMA, still holding, coming off a strong week. So do you have to respect that? Looking at the daily chart, you can see we have been flat for 2 days. We're below this previous low going back to 28 December after that pretty significant dip low. VWAP and the 21 EMAs are above the 9 EMA. Momentum slightly bearish, RSI slightly bullish. And it just seems like we're losing momentum here at a lower high from this previous high. And then moving over to the Qs, obviously very similar chart, but in terms of levels, 412.75 is that most recent high, which is your all-time high. But right now we're at 408.81 in terms of support. But looking at the lower time frames, you can see we did break below that after hours. Seems like it's pulling back to that 55 EMA down at 408.10. And then if that level breaks down, then you're looking all the way down to 408.51. And remember, this is the options expiration, so we are expecting a little bit of weakness into the end of the week. And it seems like it might come a little bit early going into Tuesday, which is typically bullish in terms of seasonality. Moving over to the Russell, you can see we were just barely down, 0.01, so flat on the week. Momentum stepped down as you would expect. Had a big bearish week the previous week at 3.72 and then basically held at that same level. So support 191.81, tested that 144 EMA sitting at 195.23. So that's kind of the range we're looking at. My level is 195.15, so those are basically on top of each other. And I would expect this to pull back even more. 200 SMA sitting down at 187.56. I would expect at least a test of that level after we break through the 9 EMA. And we're looking for the RSI to pull back to the SMA, which is sitting down at 50.77. So about 7 points lower on RSI, which would give you room to get to that 200 SMA in my opinion. And then looking at the daily chart, you can see moved lower, consolidated, basically flat for 5 days in a row, holding below VWAP and the 21 EMA. 9 EMA sitting at 194.93. So we're below that at 193.23. And then let's look at it on the hourly chart. Yeah, we're below all the EMAs and SMAs on the hourly chart, so that's quite bearish. Again, looking for 191.89 to break. If that breaks, then we're looking all the way down to 189 and that 200 SMA that I talked about before. Momentum and RSI on the shorter time frames are both bearish. Moving over to the Dow, again, positive week, 0.31. You can see these 3 weeks in a row right in the same range. We're below 376.35, which is my level. Momentum stepped down, still a very strong rally. We are still above all of these all-time highs, so we're in price discovery here. Everything says that we can still go higher. The Dow has been one of the top performers here, and you can see this massive run. We've consolidated for about 4 weeks in a row, slightly bullish from that 4th week, but we're throwing wicks, 3 wicks now. We'll see what happens next week. Looking at the daily chart, we are just barely above the 9 EMA, touched down to the 21 EMA at 374.90. Just seems like we've rallied up, consolidating, wait for these EMAs to hold, then we'll break down to that 55 EMA all the way down at 358.36. Should give you obviously a lot of downside potential. Momentum bearish, RSI, it is above the 50 line, but this does not look great. So you can see a breakdown, retest, further breakdown, and it is sloping down more now, so everything does look a little bit weaker. Looking at the hourly, doesn't show much. We've been consolidating for a while, you can still see that. After hours though, we are below all the EMAs and SMAs on the shorter time frames, which is not particularly great, but not super informing. Moving over to the equal weighted S&Ps, similar thesis to the Russell, basically flat, 0.22 to the upside, momentum rolling over, RSI basically flat, volume ticking up on that candle. Does seem like we're breaking down. You can see that a little bit better here. Big down week 2 weeks ago, last week, slightly bullish. Looking for a pull down to that 9 EMA down at 152.94, but it's still sitting right on top of these highs back from January of 23 and then here in July of 23. And then looking at this daily chart here just for a moment, you can see consolidation, big bear candle, breakdown. We're right on this trend. Once that breaks, I would expect it to move down. Support at 155.79, shorter term support 154.66, and then next major level 153.19. And then after all of that breaks, then I'm looking for 149.82. Momentum bearish, RSI bearish. Moving over to SPY Russell and NASDAQ SPY, looking at the ratios. SPY has been outperforming the Russell. Russell has looked weak. And then looking at NASDAQ SPY, we had the NASDAQ outperform this week, so we're still in this trend. Held that 21 EMA after testing it. But look at this breakdown on RSI. Big breakdown below it, bottomed out at 55.52. Pulling back to the SMA, if it tests that and breaks down, then we could see a little bit of NASDAQ underperformance. So SPY showing a little bit of strength. Dow is probably still the best. And I think this NASDAQ outperformance is a little bit short term. See how that plays out. Right now, NASDAQ and SPY holding above the rest. Moving over to SPX divided by the M2 money supply, you can see we are still at this most recent peak. Testing that 22.97 level. Once again, momentum did tick towards bullish. RSI still a little bit bullish, but we're definitely extended. Very interesting. You can see, and it is worth noting, you can see the EMAs on the MACD are lower than the EMAs than we saw here on this July peak. So you have some divergence on the EMAs on that MACD. Fairly interesting. Similarly, divergence on the RSI from July to current levels. We're also seeing the M2 money supply continue to contract. That's why I continue to watch the Fed balance sheet, which continues to go lower as those bonds roll off and money comes out of the overall supply. But right now, market's still holding at this level. But critical level, if it breaks down from here, I would expect it to break down pretty significantly, similar to what we saw here. Touched a resistance, pulled back to that 55 EMA, which is holding all the way down at 2061 on this ratio. Moving over to Apple and Tesla, we had Apple up 2.62%, still an inside candle, still bearish RSI and bearish momentum, so not great there. Couldn't get above 186.81, so that's your resistance. Current support 182.37. We're below the 9 EMA on the weekly charts. We did cover these a little bit already here on the Friday video, but you can see a pullback to that 55 EMA after touching the 200 SMA. I would look for a bigger breakdown from here. Momentum still looks okay. We're right at the RSI, so if it's going to break down, it's probably going to do it here. And then looking at Tesla, absolute dumpster fire. 2 big down weeks in a row. We talked about their issues with the Houthis on the Friday video. 7.83% to the downside. We're right at that 200 SMA on the weekly and the 55 EMA. Momentum bearish, RSI bearish. I would expect this to break down even further. Next level, 214. We've been talking about that one, but at this point, I'm looking for a bigger breakdown to these previous lows around 197.75. And if that most previous low breaks, then you're looking to these next lows down around 167.34. I don't think it'll do that in one straight move. It certainly could. It's done moves like that before, but probably see a bounce from here, slight pullback, and then a bigger breakdown if it's going to do it. Moving over to Microsoft and NVIDIA. This is really what's driving the NASDAQ higher right now. You can see Microsoft 5.63%, NVIDIA 11.43%, absolutely colossal moves, which makes the week after next even more important with their earnings. Like I said, they are now the biggest company in the world in price discovery, making new highs. Have no levels above it. Everything looks bullish on Microsoft. Similarly, here on NVIDIA, just added this level here today at this most recent high, 553.88 on this level. Momentum bullish, RSI bullish, as well as volume. Look at that volume, 289 million shares traded, absolutely colossal. Big breakout above this consolidation, and both of these look very bullish. And like I said, these are driving markets higher. And if it wasn't for these stocks, I think we would see definitely the SPY and probably the NASDAQ lower as well. Moving over to staples and discretionaries, we have staples continuing to outperform 1.1% to the upside, whereas discretionaries 0.78%. This was a new high close here for staples on a recent basis. This trend continues right at that 55 and 144 EMAs. That's where it's been struggling here. It's also the 200-day moving average continues to be a point of resistance. 72.50 closed above it for the first time on the weekly candle, so that's good. Momentum bullish, RSI still bullish. And then discretionaries, momentum continues to tick bearish. RSI holding in there a little bit, but we tested that, but we back tested 174.76, broke back down from it. We're still holding the 9 EMA, which is okay, but below that you got 170.68, and then most of the short-term EMA EMAs and SMAs, as well as VWAP sitting in that 166.78 level. So you would expect a breakdown from this level to those most recent supports in that area, at least in my opinion. Moving over to oil and gas and energy, both of these had a bear week, so 2% to the downside and 2.36 on energy. Gap down, doji, we're below 135.07. We're right at the trend line though, which is interesting. So we held that level, which is good. Want to see it gap up or rally from here, especially with the geopolitics. We talked about the Houthis and the supply chain restrictions. That's especially going to apply to energy and oil and gas. I would expect these to rally. They've definitely not seen any love, pulling back all the way from 92.80 to 82. So more than a 10% down move. I would have liked to see this momentum hold, but it did take a little bit towards bearish, which is not great, especially on that volume. It is worth noting that volume did come in towards the end of the week on the Houthis, and you can see daily momentum on energy did tick back up towards bullish. So we moved lower strongly on Wednesday, inside candle, gap up on that news, which does look a little bit stronger, and you can see it there. As long as these two little trend lines hold, that's where I'm watching, which is right in that 82.40 to 82.30 area. Hold that level, rally up, get above 83.50, and then we should be in good shape, at least for a shorter term retrace over the next 4 days. Moving over to transports and healthcare. I want to highlight that transports has already begun a pullback. So 3 weeks in a row of down move, slight pullback this week to the upside at 0.6%. Tested that highly traded zone, rejected from there. Ended up closing below 258.05. 9 EMA still holding, but I would expect that to break down to at least 251.77. Next level 243.37. Momentum breaking down. It's also worth noting that the Dow has been holding at its highs, whereas transports have already started a pullback. And typically those do move in tandem, so a little bit of foreshadowing from transports in my opinion. Otherwise, in terms of sectors that continue to go higher, healthcare absolutely colossal. Another 1% higher, closed above the level. Next one 141.70. Above that you have 143.39. I believe that is your all-time high on this index. Yep, so going back here to April of 22 was your peak, and we are definitely within striking range of that level. Moving over to breadth on the 20 and 50-day averages, we finally got the breakdown on the weekly chart. So 20-day average continues to break down, another bearish candle. Touched that next level, 36.60, bounced a little bit from there. Momentum bearish, RSI bearish. At this point, I'm expecting a move back to these most recent lows here at 16. Could overthrow all the way down to that 4 to 5% range, which if we do get there, then you should expect some bounces. That is a very critical area. It doesn't take very long to get there on this chart. So within a couple of weeks, I would expect to be there. Then you're looking for a shorter term bounce. But look at this 50-day average. It finally did it. We had been holding in this area for a very long time. Finally broke below that 83.83 level. Also broke below the 9 EMA at 83.10. So your next levels of support in terms of dynamic support is down at 55.26, which would be quite a lot of down move from current prices. Then you would see a touch of that RSI to that SMA. We'll see what happens then. But momentum, it's been rolling over for 4 weeks, and this is the first really down move that we've seen on the 50-day breadth. And I do expect this to continue lower. Once you see that first breakdown week, there's typically a couple to come. Moving over to 200-day breadth. Similar thesis here. We overthrew that 76.04 level. It's been a very critical level over the most recent peaks. Last week, big pin bar, clear rejection. This week, big down move. 2.66%, first bear candle that we've seen, closing below its most recent low in a long time, going all the way back to 23 October on this significant down move. Since then, it's been basically straight up. Now we're seeing at least a little bit of a breakdown. 2 days in a row of bearish momentum, RSI looking to break down further. This can have a couple of iterations, so you can see rally up, slight break, held this level, bigger break, rallied back up, bigger break. So 200-day breadth is a little bit harder to play with, but understand that all of the breadth indicators at this point are bearish. Moving over to yields, I did hit it on the Friday session, but just a brief reminder. 2-year falling a lot, 10-year falling a little, waiting for this to revert. It does seem like it's coming here pretty soon, especially with how fast the 2-year is falling and with how the 10-year is holding up. Moving over to the dollar, again, similar to Friday, still in the same consolidation. Let's go ahead and look at it on the weekly chart. Absolute doji. So we saw all of those days in a row, and sure enough, doji here, 0%. You don't see that very often. Absolute zero on the dollar index, 0.004 to the upside. Momentum continues to tick towards bullish. bullish. If we continue to see a little bit of strength here, look for a breakout on the weekly chart, which does look a little bit more bullish than the daily chart. Then that would correlate with a potential down move in equities. Dollar strength typically points to weakness in equities. Moving over to bonds, J&K, massive week, 1.32%, got above 94.82. Everything still looks pretty bullish here. Potentially up to that 144 EMA at 97.83, certainly possible. We talked about junk bonds being in extreme greed, and it does seem like that is happening, but it still looks strong. Bullish momentum, bullish RSI, strong bullish candle. Want to see it get above this previous wick from 26 December. That would push you above 95.61, certainly possible. TLT, on the other hand, looks very weak. So we tested that 55 EMA on the weekly, talked about it on Friday on the daily. It's at the 200 SMA on that chart. Momentum rolling over, RSI looking to pull back to the SMA. Volume did come through a little bit off of that 9 EMA, didn't quite get there, so came up a little bit short, which honestly is a little bit bullish, but overall I would expect TLT to continue to break down at least a little bit as yields continue to look slightly weak. Moving over to volatility, move index popped up, VIX popped up. VIX looks a little bit stronger. Let's go ahead and look at this on the weekly chart. So the week as a whole was not great, but it did come down to that support and bounce a little bit. And you can see on a closing basis, this is still higher than the 26 December week. So we're showing just a slight bit of bullishness, nothing major. We're still at these very low levels for the VIX. So until we see a consistent trend like we were seeing here, this is what I thought we were going to see with a bigger breakout from here. Then we ended up melting right through that level back to these previous lows here. And then you can see on the Friday session, a little bit of a higher low from this previous low, something to work off of, at least in the short term, potentially, but I would be patient here. VIX still at very low levels. Moving over to my accounts, the after hours yesterday, it took like $300 off. That was very strange, but I was up around 114,000 going into the end of the Friday session. I wonder if that's because of the down move that we saw after hours. You can see almost $1 of downside here after hours on the Qs, and I have those 400 shares. And then option prices don't move after hours, so those have stayed flat. Something to pay attention to. So that's probably what it's looking at, and that might be true if we see a little bit more follow through on Tuesday. But right now, 13,700, which is about 1.2% of bullishness on the week for my accounts. And realistically, I think it's probably that 1.5% with that extra $300. We'll see how that plays out on Tuesday. But otherwise, positions, still have my covered call on the IWM at 187 with a lot of protection there. I think the IWM looks weak, just like I said on the charts. In terms of the Qs, I think they'll probably roll down as well, but I have lots of protection from these covered calls as well. And I can always take off shares if I need to. And then looking at the XLE, I did pick up that position once again. I think energy looks good at these levels after the big down move that we saw, plus the geopolitics restricting energy around the world. Should see at least a couple of days of bullishness, and this covered call expires on Friday, so really only need a couple of days of bullishness, get above 83.50, and then I'm effectively selling the stock at 84.20 after buying at 83.12, so a little bit more than $1 of potential profit if we see a little bit more follow through on energy. Moving over to profit and loss graph, as long as we stay here, I'm in good shape. Max loss for my Qs position down at 383, so a lot of downside room, and I can always take off these shares if I need to. Right now, just holding this position, moderately bullish. I have a little bit more room to the upside if we can hold in these levels, and I can always roll out in time if I need to, if the rally gets too aggressive. Right now, we've seen sideways price action, so I'm currently just holding, basically neutral going forward. Let me know down in the comments section what you think of the US economy and the upswing on cyclicals, getting back into positive territory and back above non-cyclicals. And then let me know what you think about the charts. Are we topping out? Are we fading? We're definitely not making new highs, but we're not falling quite yet. Otherwise, if you got any value out of this video, make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.